All right, welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for joining us. If that's what you're just doing, if you've been with us all day, well, I'm going to go through this stuff and make sure it's fun and informative, and then I'm going to make you stay. All right, why don't we take a look at what's going on with corn? Let's take a look at that corn board. Let's bring it up right behind me there. Look at this technology. That's swift, isn't it? 3.5 cents lower in that front month. That's March. We've got a 674 last there. Just trading heavy, right? 3 cents lower in the May, 672.5. Look at new crops down 2 1/4 cents, 5.93 3/4. Haven't given the market anything to rally off of, so it's just kind of rolling over with nothing to do. How about soybeans? Let's take a look at the soybeans. Well, 9.5 cents lower in March to 15.22.5. We've got a dime lower in May to 15.15.5. Let's go out to the new crop. I've got that fired up. We didn't have it the last time, but I have it now. New crop, Novi 23. Well, that's down 4 1/4 cents. That's not too bad. Still in that range between 13.60 and 70. We're at 13.65.5. Chicago wheat, you ask? Chicago wheat, we deliver. What is wheat doing here in Chicago? A penny lower, 7.55 3/4 in March. A penny lower in May to 7.67 1/4. Really kind of a quiet board all the way out. Let's talk about hard red wheat in Kansas City. This is up here. This I can't say on fire, but it's strong. March is up 8 1/4 cents to 8.81 1/4, while May is up 7.5 cents to 8.73 3/4. Why don't we take a look at the Minneapolis spring wheat? What's going on up there? Kind of a quiet board. Looks more like bear spreading, if you ask me. March off a penny 1/4 to 9.20 1/4. May's down 1.5 to 9.13 1/4. But go out the deferreds to even say Dees. That's up 3/4 cents, 8.97.5. Finally, let's look at cotton. What's that got in store for us? 185-point loss. March down to 83.58. These charts brought to us by Bar Chart. Let's bring in our next guest analyst. That's going to be Todd Horowitz. He's with Bubba Trading, and he's in Chicago, getting ready to go back to Vegas, but he's in Chicago right now. All right, Todd. I think we both kind of feel the same here. Haven't really given the markets too much. We're waiting for a report on Wednesday, but I don't think we're going to get much out of that either.
I don't either, Scott. I think what you're watching is, if we look at bar charts, no particular place to go. We're really just stuck in these ranges that have no action, and there's no volume to support a move in either direction. And I think you continue to have, it looks to me that the funds are trying to accumulate and get long here and continue to try to keep pressure so they can keep the sellers in the market so they can buy. I think when you look at the bigger picture, the input costs continue to go higher and the futures prices continue to fall or stay steady, which is not a very good marriage. And I do think that there's a very good chance that we'll see much higher prices. And I think we're starting to see some movement in some of the other commodities that indicate that we'll be seeing the grains moving here pretty soon as well.
Do you think with the inputs being where they are, that we're going to have to see higher prices? I mean, we don't have to see, we could see a bigger crop down south, there's a lot of things that are really posing a decent risk for America's producers because we're going to put it in the ground. We'll see what happens in South America, but then if this economy falls down or what have you, you might be pulling stuff out of the ground at harvest. It's not the price that you were hoping for.
I think that's a very big issue, Scott. I think you nailed it. And I think that may prevent, see, here's the problem that nobody talks about. This may prevent some of the smaller farmers, which add up to a big farmer when they're done, from actually planting this year. I mean, look, if you know that you're at a loss to begin with, and we're still, these interest rates are still not stable. And because most farmers borrow so much money to have to be able to farm, there are risks from the banks as well, too. And they're already paying 2 to 3% more than any normal person pays. So there's a lot of bad issues that could prevent and make us even shorter on crop than we are now.
Yeah, you're right. I see it myself. I don't want to be a Debbie Downer. I just have to be able to put it out there because it's something that everybody should have in their marketing plans. All right, Todd, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz. He's with Bubba Trading in Chicago after this. All right, welcome back. Thank you very much for joining us. Let's take a look at what these live cattle have in Chicago for us. See if there's anything any better over there. And I would say there is kind of, but we don't want to get too excited over a 40-cent rally in April, do we? 164.52 is last in April. That's 40 cents higher. We've got a June board that's up 35 cents to say 160.62. If we move over to see what the feeder cattle have, watch this technology. Bam. Boom goes the dynamite. Remember that one? Let's talk about feeder cattle. We've got March up $1.62 to 187.72, while April's up 95 cents to 191.57. And then finally, let's take a look at the lean hogs. This one's having a rough day today, folks. April's off $3.55 to $82.92. Just can't get off the mat here. And $2.90 lower in the May contract to $92.37. Let's bring back in our guest analyst who's been patiently waiting in the wings. That's going to be Todd Bubba Horowitz. He's in Chicago right now. Todd, anything that you want to say about the live cattle here? Or no, this livestock, period?
Well, I think live cattle look great. I mean, it keeps making new highs. We're only 8% from the all-time highs. I think we continue to try to churn higher. I don't believe there's a ton of room to go the upside, but I don't think they're going, again, I don't think they're going down. I think hogs look very bad in here. And to me, they're getting to a point they look bad enough. I want to be a buyer here. I cannot remember seeing April hogs at the similar price to where December hogs went off the board. There's usually a much more wider divergence between those two. And to me, they're way overselling these hogs into a hole. And I think that you're going to see some pretty big movement in the hog market here. And especially if oil continues to climb, I think that's going to even be more bullish for hogs as well.
Real quick, you said something about oil during the break. You want to give us a quick comment on crude, what your thoughts were there?
Well, I mean, crude is lower, but I don't understand why. And I think that, we're coming up to driving season, and don't be surprised if suddenly we get a shortage from our friends in Saudi Arabia and OPEC, and suddenly prices skyrocket to the moon, because I could certainly see crude going back over $100 a barrel easily.
Well, that's going to throw a wrench into the works. I mean, we just got a 517,000, new jobs number.
Yeah.
If we start to see energy go through the roof, Todd, that could be pretty inflationary, don't you think?
I think it's very inflationary, and I think this is the problem with the Federal Reserve continuing to raise interest rates and hiking into a recession. You look at the yield curve, and the inversion is almost never been as bad as it is today, which means that the short-term money is a lot more expensive than long-term money, which is incorrect, and it's not the correct ratio. And this is going to create, or has created, recessions every time it's ever happened to this extent. And, listen, you may or may not already be in a recession. Look at your own bank balance, and you'll see if you're spending more than you're taking in.
Yeah, but Todd, 517,000 jobs. It's nothing to see
here.
Yeah,
there were part-time jobs. Right? If we look at the real story, we'll find out that they're part-time jobs. And these people are going to make less because they got more driving to do to go from job to job.
Okay. Great stuff. Thanks for being on, Todd. Bubba Horowitz, he's in Chicago with Bubba Trading. We're here in Nashville, and Janet's on the desk with me, and good stuff.